is literally curving up here. The 72-day is now curving up. What we're literally about to do is we're about to have almost our 200-day, what, a 200-day, the 72-day, and a 21-day. We're about to have them on par with each other. So this is going to be, and if that's, and if in case if you're wondering, yes, that is a really bullish signal that they're going to continue. Welcome back, YouTube. So in today's video, we're going to look at several indicators here to get an idea of where the potential floor is for Dogecoin and why we're seeing shorts react the way that we are. I've talked about this over the last few days, and I said that we're going to see shorts kind of spike up here, and we're going to see them more than likely go back to the 200-day moving average, which is what happened yesterday. And now they're even above it. And I'm going to tell you why I think this will continue going forward. So let's get into it. So what you're looking at here is the heat map, courtesy of Bookmap. You are looking at the pools of liquidity surrounding Dogecoin. And if you're wondering, well, how come you don't really see a line above the equilibrium or below it, it's because Dogecoin is sitting right in the middle of it, which is why we're having like this little tug of war between buy and sell orders. Sell orders are going to be red. Obviously, the green are also going to be the buy orders. Now, typically, you'll see the buy orders or the or sell orders. You can also see some support either above it or below it outside the equilibrium. But right now, you can see that it's literally just trending right in line with the current price action. And I believe this is the indication of what's going to happen going forward if they continue to try and get Dogecoin down lower than this. And I believe they are, because at this point they're kind of stuck. Otherwise, it's going to just reveal what they've been doing this entire time. At some point, you know, it's literally like when you are so deep, you really have no other choice but to continue growing the cancer. And I believe this is kind of like the state that they're in. Because typically when you get a breakdown in a crypto asset, or really just any asset, the cheaper it goes, especially when there's a lot of interest in it. What you're waiting on, normally what the pools of liquidity are, either they're taking advantage of it right now, or they believe that, okay, there could be some further breakdown, and you can get away with it for a while until you have that point where it's just too good of a deal to pass up. And then this is typically where you have these runs. And this has happened in pretty much any of the quote unquote meme coins that have blown up over the last year. What happens is they're all ridiculously shorted because they're chosen by the people, and big funds and stuff like that want them to go away. So that's something they all have in common. And what happens is they'll keep pushing and pushing and pushing, and they get it down and they get it down and get it down. And at some point you have that head-on collision between retail saying this is just too good to pass up versus the amount that you can actually short. And then you have that blow off, and typically you have that big run up. The problem with this is, at least for shorts, is because when you do this, you're not able to kind of retract and go back to the previous levels that you were. You'll see that they'll try and buy time, and they'll start swapping, which is literally just pretty much exiting the old positions. But the problem is, because you're still trying to get the price of the coin down, you don't want it to go up. Even when you swap, yes, you can collect profit on that or just leave it, but you have to make another re-entry immediately. And typically you can identify this just by the change in patterns in the charts, which is what we're going to look at after we finish with this heat map here. That change in pattern is a great indicator to know, okay, that they're swapping, but they cannot relieve the pressure and go back down to those previous levels that they once were. And before I transition to the other chart, I do have a link for Bookmap. I know a lot of you guys are asking, can you use this for like trading and stuff like that? This is actually what the program is for. It's typically for trading and looking at pools of liquidity to kind of get an idea of where you're going to get a bounce or a sell-off at. So I do have a link for that in my description section if you're interested. So yes, this is the updated Dogecoin shorts chart here, and we'll see that the red line, which is the 200-day moving average, we'll see that Dogecoin has now peaked its head above the 200-day moving average. And last night we saw that it had came up and pretty much touched the 200-day moving average, but now you're seeing that they are pretty much having to double down to try and get the price action to continue this downward trend here. And this is going to be evidence if we're going forward, because I know that a lot of times people saying, oh, it's bots and blah, 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 stuff like that. We're going to get evidence of this over the next few weeks that they cannot relieve the pressure. And this is going to, if I'm correct, this should give us another leg up in shorts, and pretty much of them going to pretty much a higher high in shorts, and proving that, okay, well, this isn't just bots and bots action that's suppressing the price of the coin. Because we've seen here, they had this pretty much this 14-day period, 2-week period, that they were roughly around the 200-day moving average, and they did some swapping. And even then, they could not get it back down to the previous levels that they had here at around like 987, like below the 1 million mark. They literally could not get it down below that. And they had to come back up to the 21-day, 72-day moving average. They got a little sell-off, a brief sell-off back down, and then they literally had to come back up to get this in line with what they need. So going forward, this is going to be the tools that we use to see if we're going to get another leg up. And by leg up, I mean that this is going to pretty much around this area here, around like the 2-1 or I say 1.8 to like around 2-1. This should create a bottom as far as from the shorts. And we should see short spiking similar to the levels that we've seen up here when it goes up to around 6-7 million. And we should start seeing these huge spikes up here as they try and take advantage of any negative catalyst or fear in the market to try and either swap or capitalize off of the fear to try and even get the prices lower. So the question remains, where are we likely to see this big pushback against the shorts? Where's the absolute bottom of the shorts here? Where can the bottom be for Dogecoin where the community is like, okay, this is going to, the buying pressure is just going to be overwhelming and they're going to have to quadruple their positions and really push back, and the buying pressure is just going to be incredible, and it's going to be, we're going to have that period like it was last year where the shorts were still coming in, but the buying pressure was just overwhelming and Dogecoin was still rising. And I think a big question that stems off of that is, can Dogecoin go lower than where it is right now? And the answer to that is because technically we bounced from one of our floors, which is around like 6 cents. And that was the one that I called like a few months ago. And we're consolidated at around 8 because I said we more than likely consolidate around the 8 to 10 range. So that has come true. But we do have some support levels that are beneath that if they're able to pull further liquidations from the market. The question is, where will the community push back? So let's take a look here. I'm going to take a look here at a different chart because it'll be a little easier than trading view here. So this should be a little easier for you to see. And so typically we have a little bit of the support here at around like the 5 to 6 range, which is pretty much from around March, April of last year. We built up some support before we literally just took off to the moon. And typically, you guys know how I feel about gap ups. Typically speaking, when you have a major gap up, which is basically a rocket ship, which is what we had last year, which is here, typically when a coin is dead or it's all hype or if it's all momentum, typically those gaps get filled in the same fashion that they happen. And this has not happened for Dogecoin, which is great. This is really great. This shows that it wasn't just all complete hype and stuff like that, that there is an actually demand for the coin and people who are long in the coin. Otherwise, if it was just a bunch of short sales and stuff like that, you would have seen this, you would have seen the opposite. Just as it went up, you would have seen it pretty much mirror that on the opposite side. And it didn't happen that way, which is great. So we've seen here as we've got like some bounces here, and we built up some support here around the 18 to 25 range. I know we stood at around like a 16-cent range for a while, the 20 to 23-cent range for a while. This is here more so just how it's averaging out over the last few years. I believe this is the all chart. So we see here that we have the support here at around like the 6 cent range here, which is great. And so of course right now we're roughly at around like 8. So we have this support here. Now, if let's just say we went into a full-blown recession and the market was on fire, it was looking like Armageddon out there, and they're able to extract Bitcoin, get Bitcoin down to like 20,000 or something, pull all types of institutional money, liquidity in the market out, and they were able to break the 6 cent level. Where would that put Dogecoin? Where's the next indication of where we possibly see some support? And again, this is hard to track because you cannot really chart consumer buying and consumer momentum. You can kind of do it based off of like algorithms to kind of get like an idea, but overall you can't really chart it. That's why I gave the 8 to 10 cent range, just because of like the psychological purposes. I felt like that would be a great place psychologically that people would say, okay, I'm comfortable entering here, and this will greatly help my DCA. And that turned out to be the case. So for here, based off of the charts, because the chart said 6 cent, and we see here that we have another bump because basically this is a gap up. Another reason that this is hard is because none of Dogecoin's gap ups have been filled in the same fashion, which is great. So because technically if you're looking at the charts and if you're just looking at like supports and equilibriums and stuff like that, you'd say, oh, okay, well, if the 6 cent level broke, then we'd be looking at around what 0.009. But I believe that is extremely unlikely just because of the amount of buying pressure that we're seeing here and the aggressiveness that they're having to take in order to even keep Dogecoin at around 8 cents. So remember, we're above, they increased shorts today 36%, and we're still hanging on to 8 cents a share. I mean, 8 cents a coin. So this is giving you like an idea of just how extreme they would have to go just for us to see that kind of breakdown. And now if the community starts selling or something like that, that's a different story here. But we know that's not the case. So this is strictly saying that, okay, outside of like FUD and manipulation, they're literally going to have to create these sell orders in order to push Dogecoin down that far. And the cheaper the coin goes, the more aggressive people are going to buy. This has been historically what's been going on with all of the quote unquote meme coins. So even if we did get that breakdown, I believe, even though the support is 6 cents, I do believe that if we got that breakdown to around like 5 or something like that, we would see the same type of buying pressure that we've seen when we got to around the 8 to 10 cent mark, which is probably like double or triple the amount of buying. And we're going to see, even in the heat map, we're going to see Dogecoin literally riding in the pool of liquidity because of the amount of buying orders that are coming in. And then we're going to have to see something like the short spike up dramatically to try and contain that. This is one of the reasons why I say it's important for everyone to remove your coins from the exchanges so that we can get an actual idea of what the true price of Dogecoin is like. And people are saying, okay, well, does this mean that this can lead to a short squeeze with Dogecoin? There's a window of opportunity here that these exchanges, they can see the coins leaving pretty much leaving from their wallets and stuff like that, going into the private sector, and they can do the right thing and start raising the rates that it costs to actually borrow the coin, or just start entering the market themselves and producing the coin so that they can be shorted. And they can pretty much adjust their books to prevent themselves from being in that situation. Now, that's if they do the right thing. Now, if they are just absolutely corrupt and or idiots and they continue down this path, then yes, that will open the window for something like that. But as of right now, it's certainly too soon to call that. So to summarize what we've seen in this video, do we have the possibility to go down lower than where we are now? The answer is yes. We do have even more room in Bitcoin to further consolidate. How low we will go, that's certainly going to depend for the most part on consumers, which is extremely hard to chart. I've not been right for the most part as far as giving ranges on how this has happened before, but at these low prices here, it gets kind of tricky. But I do believe that we're going to see very strong resistance at around that 6 to 5 cent range here without some type of major event going on to cause mass panic overall in the market. The confirmation that we're looking for here is the next leg up in shorts, which is pretty much establishing a floor somewhere where we've been over the last week here. And we're going to see the shorts here start doing that stair step approach up and literally raising the 200-day moving average. Because what we've seen here is they've already consolidated. And I don't want to make this video too long, but it's just, this is really important. We have the 21-day and the 72-day moving average. And what we've seen here is they've curved the 21-day and the 72, and pretty much where we are now, we're consolidating all three lines. Like, we're really close here. The 21-day is literally curving up here. The 72-day is now curving up. What we're literally about to do is we're about to have almost our 200-day, what a 200-day, the 72-day, and a 21-day, we're about to have them on par with each other. So this is going to be, and if you're wondering, yes, that is a really bullish signal that they're going to continue in the current method that they've been doing, which means that this is going to give us another leg up in shorts and prove my theory. But we'll see. Again, we have a little time here to kind of work that out. And lastly, there's also going to be a window that they can correct themselves to prevent like some type of short squeeze and stuff like that in the coin here if they do the right thing. I know historically they don't, but we can see, I guess this will be an opportunity here to see if they've learned anything. But this starts with a utility, which is what we're doing, and which is great as far as getting these different partnerships and keep expanding the coin, making sure the coin is out there and having top of the mind awareness, and also removing your coins from the exchanges. And when I say remove them, in case you haven't seen any of my videos, I'm talking about removing them to like a cold wallet, something that they're not sitting on the exchanges for while you're waiting to decide what you're going to do with them. I recommend the Ledger Nano. I have a link in the description section. It's directly from the manufacturing company, so there's no risk of like malware or any type of BS that goes on with a lot of the scamming that goes on with crypto wallets. I hope this video finds you well. If you found any value in the video, make sure that you're subscribed to the channel for more and like the video. And those are ways that you can support the channel for absolutely free as well. I appreciate all of you. Thank you. And until next time.